We have more movers that you should keep on your radar. Joining me right now, Diane King Hall, host of Morning Movers here on Schwab Network. Starting off with a look at HP Enterprise after its earnings. Good morning, Diane.
Yeah, it had good morning. It had better than expected results in its most recent quarter, and then it called out tariffs, but in a more positive way, that essentially the hit from tariffs won't be as bad as expected. So in terms of the trailing quarter, it reported adjusted EPS of 38 cents a share. The street was looking for 34 cents a share. Revenue was up on a year-over-year basis. Revenue rose 6% year-over-year to $7.63 billion. The street was looking for just under $7.5 billion. So again, better than expected on both the top and bottom line. The CEO of HPE saying tariffs are expected to dent profits, but by just 4 cents per share this year. That's down from the prior estimate. The prior estimate had been that it would dent profits by 7 cents. They've also raised the lower end of their full-year profit forecast. Their full-year forecast now projecting to come in a range of between $1.78 to $1.90 per share. That again is better than the prior estimate. In terms of their full-year revenue forecast, they're expecting full-year revenue growth to come in between 7 to 9%. That's adjusted obviously for currency. Their third quarter guidance, they're projecting that to come in a range of between 40 to 45 cents a share for EPS. Revenue, they're expecting that to come in between 8.2 to 8.5 billion. In terms of where they had growth, they obviously had AI systems growth. They've been seeing growth from sovereign customers. So we're talking about AI momentum, the execs calling out momentum in the Middle East. So there is strength there. Again, they've got this upbeat outlook, Nicole, for the current quarter. They're noting that their pipeline is starting to reflect the AI developments in the Middle East. We've heard from different companies speak to growth from sovereign customers. Their momentum with both sovereign and enterprise customers, that reflects just something that they do that's kind of more idiosyncratic to HPE, their expertise in direct liquid cooling. It's a technology that accounts for, AI chips now are powerful, but they tend to be hot. So more companies and countries need this kind of technology. Now, there is one kind of headwind circling around it. That's activist investor activity from Elliott Investment Management, which, as you know, Nicole, they had recently disclosed a stake in HPE, but shares gaining ground today.
Yeah, and great news with AI helping the AI pipeline that you mentioned. That's some great news there. And just saying that they feel that the business environment has settled, that they have more improved visibility into market conditions. I almost find that hard to believe, but that's what they said.
Yeah, look, that is what they said. And look, you are seeing analysts boost their price targets today on HPE. Barclays is upping their price target to $24 a share. They are overweight on HPE. That is where they were before, so they were constructive before, still constructive. Raymond James boosting his price target to $26 a share, so they see some upside from here today. Wells Fargo increasing its price target, but not much from where we are right now. They boosted it to $20 a share. So again, you are seeing some momentum from the sell side in reaction to HPE's latest results, Nicole.
All right, and next up, we'll take a look. We've been watching Dollar General a lot this week. Now we have Dollar Tree reporting its earnings this morning. We're seeing it down over 8% on the heels of that.
Yeah, it's getting hit off the back of its quarterly numbers. It's not just about its numbers, though. It's about what they mentioned about tariff impact. So you saw Dollar Tree make a sympathy move to Dollar General yesterday off the back of its quarterly results, and you saw some strength. They're not as strong as Dollar General, but again, it had gained some ground. In terms of adjusted EPS, they did report better than expected numbers for the first quarter, $1.26 a share. Revenue also topped expectations at $4.64 billion. You also had comps coming in better than expected. Same-store sales rose 5.4% year over year. The expectation was for 4% growth. So again, they did well. In terms of the second quarter, their forecast, they're expecting that to land at the higher end of their guidance range. They did flag near-term headwinds from tariffs. They think that will be a driver of earnings volatility. So that may be what part of the pressure is that we're seeing on this. And then also, in terms of their guidance, it's different than Dollar General. Dollar General raised its expectations much more, essentially, than what Dollar Tree see. Now, Dollar Tree forecasting fiscal 2025 adjusted EPS to come in a range of 515 to 565 a share. That is actually a little higher than what they previously expected. But again, they've talked about this economic uncertainty. So anytime you kind of flag that more, it tends to put pressure. But look, Dollar Tree had already been performing well year to date, despite some of the pressure that we're seeing today. So even with the downtrend that we're seeing today, the stock is up more than 15% for the year.
Yeah, that's good news there. I mean, with Dollar General yesterday and some of the optimism and even sort of lifting the guidance a bit, I spoke with Arun Sundaram from CFRA, and he just didn't buy in. He had a sell rating prior to the report, and he said they'll look at it again and maybe make some changes to their ratings. I don't see it here right now, but his feeling was, I need to see more. It just wasn't buying into the fact that the company was doing so great. He felt that they were raising guidance because they had a good first quarter, but that wasn't enough.
No, that's great perspective there. And it's funny, I talked to a retail expert in the industry who had the opposite perspective, but his perspective was based on the consumer holding up in the face of a strong job market. But Nicole, you just mentioned those jobs numbers earlier. The ADP report coming in weaker than expected. We'll see if the payrolls report from the government on Friday lines up with the ADP numbers or if there's some divergence there. And that will really tell us about the health of the consumer. If you have a job, you can keep buying things, right? But if you have weakness in the job market, that can certainly start to put pressure on the consumer, and that can affect the retailers.
And things are just more expensive. They already are. We're already seeing tariff price hikes on things that may not have been affected by tariffs yet. Tesla out with the China sales numbers, and this is down 1.8%.
Yeah, so you still have some pressure on Tesla when it comes to the momentum or lack thereof that we see in China. There's essentially a persistent decline there, Nicole, in sales. China sales falling for the 8th month in a row. That's its largest international market, so that's why that matters. It's had some weakness in Europe and continues to have some there, but that's a much smaller percentage of its sales. In terms of where you saw the decline, it's Model 3 and Model Y deliveries. You saw that fall 15% year over year in May. This is based on China Passenger Car Association data. Now, deliveries were up month over month, but again, the broader trend is still negative here. Again, it's losing ground for the 8th month in a row against the China-made vehicles. So we're talking about the BYDs of the world. There's been this brutal price war that's been going on there in China, as you well know, Nicole. So it's struggling amid this fierce price competition. But even the government in China has been trying to kind of send the message that this price war needs to stop, essentially. Tesla's been trying to offer some, incentives to boost demand there. They've been, trying to kind of work with the government there. But again, you've got the competition from BYD and some of its other peers with regard to price cuts and incentives. So, it remains to be seen if they'll reclaim some ground. Obviously, you have the new Tesla, the Y coming, the Model Y coming, that could help stoke demand. And so that is expected to potentially stoke demand in both China and Europe because, again, you're seeing a downtrend in Europe sales as well.
And we'll watch for June 12th, the robo-taxi launch, all details on full self-driving. Thank you, Diane King Hall. A big month here for Tesla as Elon Musk steps away from Doge and has now resumed his role as a leader in the Tesla world. But Ross Gerber overnight saying that Tesla has a lot of work to do on full self-driving ahead of the robo-taxi launch. In fact, saying that Waymos are way better.